Hey guys, welcome back on the channel. So in this video, I'm going to show you how a dashboard can be read here on a given liquidity pool or using PancakeSwap. And PancakeSwap deployed not only in several EVM blockchains, but also recently on Solana. The dashboard itself will be different from Solana to all the others, okay? We will be going over both. At the end of this video, I will link up others about yield farming on PancakeSwap. So even if you're a complete beginner, after watching this, you'll get more content teaching you how to navigate the platform, read information, all of those things. So this is dedicated for liquidity providers or people who are interested in providing liquidity with PancakeSwap. And since we're at it, if you are looking for profitable pools, you gotta look at APR, but mainly you should look at volume to TVL ratio. The volume should be higher than the TVL. That's optimal. If it's 1-to-1, it's already good enough, but depends a little bit on the pair. For example, recently this one has been trending. Aster, it has been a highly traded token recently in the past few days at least, and you can see the TVL is 3 million, but the volume is over 100 million. So it's a really good ratio. So that's also why you see this high triple digits APR on it. All right, so that's just the basics to selecting a profitable liquidity pair. But of course, in my opinion, you should be looking at something for the long term, not necessarily looking for something that has high yield but it's not going to last. And Aster, likely it will last because this is BNB's ecosystem response to Hyperliquid, right? So let's use it as an example. Go ahead, select that specific pool. It has some nice APR for 116%. Then all of the information being shown here is volume, liquidity, and fees. So volume relates to the amount of money flowing through the pool. The highest that is, the higher the volume, the higher necessarily the fees will also be. So here we have the two highest fee generating days were September 25th and 26th. If we go back onto volume and we go with a weekly chart, we will see the same thing here, September the 25th and also the 26th. You can see that's also where here the volume has been the highest on average. September the 27th also, and if we go back once again here into fees, we can see 25th, the 26th, and the 27th of September have been the highest yielding days just because of that. It has been where the highest amount of volume was generated. The liquidity shows the current liquidity distribution. So on red, we have the current market price, and then all of these other surrounding blocks are just where the liquidity is distributed currently. We can zoom out and zoom in. You see we were pretty much zoomed in, but this shows where the most amount of liquidity has been deployed. So there's a lot of people still holding in between this range, 1.91 up until 2.11. This is where most of the liquidity has been deployed. Where there is more liquidity, there is necessarily more competition. So the APR, if the price moves back into this range and the distribution keeps the same, the APR will necessarily go down. And the same is applicable, for example, if the price drops suddenly to the left and ends up in these places where there is lower liquidity, there's less competition and the APR will skyrocket. It can even get to 4 digits APR, but usually if that happens, there will be some sort of redistribution and people can deploy more liquidity to take advantage of it, etc. The same thing is true for if the price goes onto the right and the token becomes more expensive. Here the APR will also be much higher, at least until the market makers adjust and deploy more liquidity in those ranges, okay? So basically that's that. If you want more precision, you can use these minus and plus action buttons here to go in and out of the current liquidity distribution, zoom in and out, and have a better idea. Lastly, TVL. TVL is just the amount of liquidity that has been deployed in the pool. Usually you will see that when there's a lot of activity with pools, a lot of interest from traders, the TVL will go up. When the markets cool down and the trading pair, it's not generating as much fees as before, there's not all that much interest from the markets anymore, you will see that the TVL will go down. And likely when that happens, it's also because people are just selling the token, going out of the pools, selling their bags, and likely the price will be going down. But as a liquidity provider, you will earn either the price goes up or down. It's just a matter of where you are selecting your ranges. So you also have these action buttons here to give you the charts for example, volume on a daily, weekly, monthly, or year basis. There's pools that have been active for a number of years. Not the case here with Aster because it's a very recent token. Then you have some extra info here, like how the price has been moving. Well, not the price in this case, the amount in the TVL has grown for the past 24 hours, 12.6%. The liquidity pool composition from all of these 4.44 million, you can see that a little bit short of $1 million is made from USDT, and the rest is just Aster tokens. Then you have the volume that the pool has been handling for the past 24 hours. It dropped 16% in volume, and how much fees also the pool has generated, again for the past 24 hours. So for example, if we go back here onto fees, we can see even how much fees it generated in other days. So in this September 25th, the highest fee generating day, it went over $67,000 in fees, which if you are a complete beginner, they are going to pay out to everyone who is adding liquidity here to the pool. Depending on how much you added to the pool, you will have a proportional share of the fees that the pool generated, okay? So let's click add liquidity, because now we're going to see how the pool gets to be tailored by users. And when I say that, what I mean is that this is the part where you set ranges. So right now we're looking at the ranges. You see here these flags. These are the top and bottom ranges of your position. You can set this at will. So if you even scroll down, you can go full range, which will give you a much lower yield, but you won't have to worry about managing price ranges, and you'll pretty much generate fees non-stop 24/7, but the yield will be very low compared with what it can be with having you setting your custom ranges. All right, so by default you have action buttons that allow you to quick input a 5% range on the upside and downside, so overall 10% range. 10% range gives you overall 20%, minus 10 plus 10% around the current price, right? And then we have 20%. These are quick action buttons. You can then go ahead and manually adjust the selected ranges at will. You have the candle charts here that can help you read how the market has been performing and adjust your ranges accounting with that. So for example, if you want to encompass the whole price ranges that this token pair has been moving through since the pool has been created, you would have to set up something like this. So it's something like 50% on the upside minus 31% on the downside, and then you have the estimated APR here, which is still quite substantial, over 270%, triple digits APR. So that's not bad for such a wide range, right? So it goes to show that the pool has been pretty active. You can go ahead also and input the price here manually. Let's make it a round number, 1.2, and max price 2.70. Let's go with that, 2.7. So this is another way that you can also set up ranges. Now let's look at what this gray area here does per trade. So this is the liquidity distribution, okay? This is a horizontal readable chart. So what this shows you is where is the liquidity being distributed. This is what we just saw before when we went over to see here the liquidity tab, right? So we had to zoom out. Let me do that once again. So this just shows the same thing, but here it shows vertically, and in the other screen it shows it horizontally. But you see that there's a huge amount of liquidity still distributed at around 1.91 and 2.10. That's what we saw, right? So if you go back at liquidity, you can see here, for example, this is what people did when the price was at around this range, and you can see 1.81, 2.2. So this is roughly the same thing, right? So if we zoom in a little bit, you can see that this wasn't really much adjusted. So now it's a bit more adjusted, 1.9, 2.12. So that is the same thing we were just looking at. But in here, just for our conveniency, it shows it on a horizontal level, and it can be a bit confusing, especially for complete beginners. But pretty much that's it. That's what we are looking on screen. We have the candle chart, we have the liquidity distribution, and we have these flags for ranges, upside range and downside range. In my opinion, it's not the best. If you're looking to provide liquidity, yeah, this can get the job done, but you're much better off using something like Gecko Terminal or DEX Screener. So actually, let me go on DEX Screener, and for that we can go up here, scroll up, go here into the BSC scan icon, and you see there's these three different addresses. One is for the pool, one is for the Aster token, and the other for USDT token. So we can easily copy any of these and also open them straight up in the BSC scan page. But in this case, I'm just going to go ahead and copy the liquidity pool pair. Then I will go here on DEX Screener, click search, and then just paste that same address we just copied, and it will straight up show up the single pool we were looking at. So this allows me to check out everything about this pool, but on DEX Screener, which is a much better way to just get a reading of the whole chart than compared with the interface on PancakeSwap, at least in my personal opinion. It's like I said, although this one gets the job done, it's not as good, but you can also still use here different metrics for what's showing on screen. It's by default showing 1 month, but this is a very early token, so it doesn't have one whole month of metrics to show, but you could go also with 7 days, 1 day, and you can see how the price and the liquidity has been moving for that amount of time. We still have not added liquidity, right? So after you determine your minimum and max price, we can go up here and select. Actually, before we do that, maybe it's a good idea to give you an understanding of ranges. So in this case, we're looking at a chart, right? And we see we're not all that far off from all-time high. We are at 176, so that's roughly 35% below the all-time high, but we see that we are still up 68% from when the token was launched. So if you want to farm this for the long run, which could be a very profitable opportunity because Aster just launched and it's backed by Binance, like I said, you might want to get with a wider range. So if you want to be completely on the safe side, if there is a thing such as that in crypto, you could go all the way down and set up a downside range of at around 65%. And on the upside, you could also go wide here, squeeze in also this all-time high, and on the upside 35%. But if we do that, so let me go down here. So we're gonna go and zoom out. On the downside, we just select here 63, it's good enough. And on the upside, we're gonna set up 35, something like this. So in this case, it would generate an APR on average at around 170%, which for the type of range we are looking at, it's not all that bad. Actually, it's very, very good for such a wide range. Of course, you could also go with something tighter and look at these horizontal support levels. Here seems to be a good one at around 35%. You can squeeze it to 25. If you want to be a bit more on the safe side, 35 on the downside, and then on the upside we could go 35 or 20%. So let's go with something a bit narrower here just to see how the APR will increase. So let's go with 30 on the downside and 20 on the upside. But let's go back here. So let's go with 25 on the upside, and on the downside let's go with 35. Okay, so in this case you see the APR just jumped to 300%. Now optimally, what you want to do is have a wide enough range that will catch all of this volatility. It can be quite tempting to set up a very tight range that will have a just insane APR. So for example, if we go, let's go with 5.5 overall 10%, you see it goes up to 4 digits APR. But the downside of that is that you will lose most of this volume, most of this volatility. So you'll go out of range very, very often, and you will miss out on a ton of fees. And also, if you go with a very tight range, in the case that the price drops substantially, you'll just taking the risk of waking up to one day to your position being worth, let's say, if it drops from this price down into this level, it's worth at around minus 50% of your initial deposit. And usually that's what happens with people that are providing liquidity with very tight ranges, and then they will panic, they will withdraw their liquidity and sell at a loss because of that. While if you from the get-go are playing with a wide enough range, yes, your position will drop in value because one of the assets on the list is depreciating, but you will be generating fees, and if the fees are enough, if there's enough volume in the pool, the fees will make up for that loss. Sometimes it will not be the case when there's a very steep price decrease, but usually if the price chops like it has been, like this for example, so for example someone who got in at this price 211 and had a range something like this, minus on the downside 1.3, on the upside 2.14. So this is a conservative entry, because if they entered at around this level, it means they have a whole cushion of liquidity here that will guarantee they will keep on generating fees. So right now the position would be less in value, but all of this volume that it has been generating so far, it's likely going to make up for it. If the price is chopping sideways within your range, that's the sweet spot, okay? So this is to give you an idea about ranges, setting ranges and all of that. So let's move on back here into the liquidity pool and see more about it. So before you committing your liquidity, you can actually select here the pool fee tier. This is the pool fee that is going to be applicable for whenever people trade using the liquidity pool you are depositing on. So if you go with this one, it has a very low fee tier, so this necessarily needs more volume. Sometimes these pools will have an insane amount of volume and they will perform much better pools that even have a higher fee tier. So this means that 1% is the cost that people pay for trading the tokens in this pool. In this one they will pay 0.25% as a fee when they're trading. So if they're trading $1,000, they will pay 0.25% of that in fees for using the pool. You can see most of the people are right now using this pool, most of the liquidity providers. 62% picks this pool fee tier. So these are actually 4 different pools for the same token pair. Which one is the best? Well, it's going to depend. Usually this one 0.05, 0.25, they work very well, but like I said, it doesn't mean that this one will not at some point outperform all of the others, even the 1%. Sometimes people think, okay, I'm gonna go into the pool that has a 1% fee tier because it's going to mean that I make more money when people use them. Yeah, that's true, but these pools can outperform. It's mostly depending on the volume that is going through a given pool. And of course, traders want to use the pools that will cost them the lowest amount of fees. So that's why you see most of the people are picking either this 0.25% or the 0.05% pools. If you're serious about providing liquidity optimally, and you are bullish about this token, optimally you want to have exposure to all the pools, and then you can move your liquidity in and out whenever you want. You take your liquidity out, you deploy it, you rearrange ranges, all of those things. You have full freedom. That's the power of crypto and providing liquidity. Now another thing is, you see some pools will have this try zap feature here. So this is very handy because when you zap in, you can pretty much ignore what are the tokens in the pool, and you can deploy something that you have in your wallet that is not even present on the pool. PancakeSwap will do all the necessary trades in the back end in order to get your token. For example, if I want to go with BNB, I can remove all of this, I deposit my BNB, and then it will do all the necessary trades to swap it for Aster and USDT. So if I would want to deposit one BNB into this pool, they would be going to show me the zap routes here, swap 0.9975 wrap BNB for USDT, and then swap some of that USDT for Aster via PancakeSwap V3 pool. So you get the idea. PancakeSwap does all the necessary trades, but not all the pools available will have this zap function, okay? When it has it, it makes your life much easier. When it doesn't have it, you'll have to manually input some specific amount of tokens. So for example, as long as the upside range is the same as the downside range, you'll have to deposit equal amounts of liquidity in dollars, in dollar value. So for example, if I go and deposit here 50 USD, you see that it automatically adjusts how much Aster I have to also deposit in order to balance this. Aster tokens get deployed on the upside of the current range. USDT gets deployed on the downside of the current range. This is how liquidity pools work. And then if the price moves up, your Aster starts to getting eaten for USDT, so it gets sold for USDT. So imagine if the price jumps above your up range of 2.1, now your whole position is made of 100% USDT. The same thing is true for if the price moves on the downside and below your range, now your position is made of 100% Aster. You always get the underperforming asset in the liquidity pair when depositing into a liquidity pool. That's why the yield when providing liquidity is so high, to just offset that risk. Okay, so if you are wondering how is it determined how much of one token and how much of another token am I depositing into the pool, pretty much depends on the upside range and on the downside range. So for example, if on the upside I just increase this, so let's say we go here to 75, notice that the liquidity just got automatically adjusted by PancakeSwap. So now I only have to deposit 26 USDT and 23 Aster, and now I have more exposure on the upside and less on the downside. Okay, and the same is true for if I increase the price here on the downside, I will have to deposit more USDT than Aster. All right, also here when scrolling up you see current price. You can use these both arrows and toggle in between how much Aster tokens you need to buy $1 and how much dollars you need to buy one Aster. It goes the same way, it's just a matter of preference and a matter of sometimes you're looking at these prices here and they're a ton of zeros, and that's kind of hard to read. If that's the case, you just go here, you toggle things, and it's going to give you a more readable amount, but it pretty much is the same thing that we're looking at when it comes to the market price of both assets. All right, so here we also have a calculator. I rarely use this, if at all, because markets are very volatile in crypto. But if you want to have an idea of how long you are in a pool or are planning to be on a pool and how often you want to compound, this can give you, based on past performance, how much yield you will get. You can get to play around with the calculator, calculate some impermanent loss even, turn on and off, have some idea of the ROI at current rates. So we could go and set up a range like this just to get an idea, right? And we would see that the ROI of $1,000 deposit staked for 30 days compounding, the yield every single day would give us something in yield after 30 days, $300 in yield. But of course, this is granted that the same market conditions keep on happening and you never go out of range. Okay, so that's that. Okay, so this is all it has to do with liquidity pools, adding liquidity, setting ranges on the EVM blockchains. Now let's switch up to Solana. So we can go here and click on Solana. All right, so we are on Solana. Now we go on to liquidity and we will find a pool. Let me just go with the random pool. Let's go with the one with highest APR, USDC launch coin. So in here you see already that the dashboard looks different. It's much more like Radium, which is also a huge DEX on Solana, and it doesn't have the same aspect that it had for all the other EVM blockchains, right? So here you get the reading from the pool token pair, the liquidity pool fee tier, current TVL, current volume, current fees generated, the distribution of the APR. Now you have here the view pool charts, and here you can get the same info that we saw before, but shown in a different manner. 15 minutes, 1 hour, 4 hours, up to 1 week worth of metrics for the volume. The same thing for liquidity and also for TVL. But again, the same thing applies when I told you about using DEX Screener. I think it's much better go on DEX Screener to take all of this information, all these metrics, but you can do it still from PancakeSwap itself. If you do not have the tokens within the pair and you are interested to swap something on your wallet for them, you can go straight up here to the swap function and you can swap straight ahead in between these tokens or maybe something else that you have in your wallet. Input here, swap for one of the tokens on the pair, do the necessary swaps in order to provide liquidity. Okay, so back here, now we have the deposit function. When you go into these pools, now you have again a different visual reading of the pool liquidity distribution. So the flags stay pretty much the same, right? You have these blue flags. These are your ranges on the downside, minus, and on the plus side, right? You could instead input your ranges here manually. So if I could go here and input 11 and 12, this would be a range. inserted manually, right? And then you have, let me put this onto the side so you can see better. In white, it's the current price range. The dashed lines in purple are just the 24 hours all-time highs and all-time lows. You see, this is a 24-hour price range, 11.9 up until 14.7. So this is to give users an understanding. So if you want to go ahead and set up a range according to those metrics, come here and you match the flags with those metrics, and that would be your current range. Of course, it's better always again to go into DEX screener, look at the chart, look for horizontal supports in order to set up ranges instead of just using the 24-hour price range to determine those, unless you're looking to yield farm in a very short amount of time. You also have here the quick action buttons, 1% range, so 2% overall, 5, 10, all the way up to 50% range. And if you want to toggle the prices once again, so you see, this is what I meant before when I said sometimes there's tokens with some zeros. This is not the worst case. There's some with newer tokens that have a lot of zeros, right? So if you want to toggle that to make it more readable for you to adjusting ranges, you can do that just from here. And then when you just insert here some amount of coins, you don't really even need to have them in your wallet, but it will give you a simulation of how much you will earn, how much in trade fees, and how much cake you are going to earn for providing liquidity to a given pool. Once you're happy with your ranges, it's just a matter of inputting how much tokens you want to deploy. And then, for example, let me go here with a small amount. So you see, add liquidity just highlights, and it's just clicking that, accepting the transaction in your wallet. Liquidity will be deployed and you will start earning yield. And then you can go here under your positions and see how they have been performing. You see, this one just shows my ranges. Again, if you don't like the zeros, you can toggle it and swap that. But the dashed lines are my down and upside ranges. The white dashed line is the current price, so it's currently out of range, as you can see, and it's out of range on the upside, so all of my liquidity from pump was sold for USDT. Pending yield is shown here. If you are in range, it will show automatically the current APR for trading fees and also for cake rewards. Again, you can withdraw this at any point in time. You can create new positions at any point in time. It's up to you. You are in full control of your digital assets. Alright guys, this is what I wanted to share with you. Someone asked in the previous video if I could do this. I hope it was helpful. If you have any other questions, let me know in the comments. I'm going to wrap this one up, guys. Thank you for watching. Take care. Keep exploring crypto. I'll see you on the next one.